Okay, everyone. Can you all hear me? Just type a one in the chat if you can hear me. Yep. Just type a one in the chat if you can hear me, just to make sure that everyone can hear me. Type a one. Just let me know that you can hear me. Just make sure. Right. Awesome. Great. Glad you guys can hear me. All right, we are on our way. Hope this week has been profitable for you guys. Trading has been a little bit choppy this week. So for those of you who have been chopped up a bit, don't worry. It is a very difficult time, or it has been a fairly difficult week this week. Nothing abnormal. Just make sure that if you are trading in your accounts or even in the competition, keep your risk limits in check. You can recover from drawdowns. Leaderboard has changed quite rapidly. All right. So again, just shows you that in trading, the ball is always moving. There isn't a final conclusion until the last day. All right. So I'm just going to quickly go through the setups in the market right now. And then I'm also going to go through one of the common equity setups that you guys will see in the market, because I actually sat in some of the classes that you guys were doing live, and I just wanted to show some examples of those setups in the equity world and how you could actually improve some of the algorithms you guys have in place. All right, but let's just look at what the broad market is doing first. All right, so the S&P 500 this week, all right, post the Iran shenanigans, so on and so forth, you can see made a nice bounce. All right. But having said that, this is not bullish enough price action to get excited yet. Okay. The core underlying path that this could still take has not changed. All right. We could still see a move higher and then another move lower before a continuation of the broader uptrend. All right. So this current pattern is still very much in play. I think right now there has been news over the weekend. No one knows for sure whether Iran is has really blocked the Strait of Hormuz again. It's an unknown to everyone. So we'll see Monday how the futures react. At the open, again, during Asian hours, just be a bit cautious if you are trading Asian hours for US futures. Usually the first 15 minutes of trade is very choppy and tends to be in the wrong direction. All right. So just be a little bit careful if you want to like take positions on and off during Asian hours. Having said that, all right, let's look at the NQs. All right, same picture, same story. All right, very much still in play. All right, we can still very much see a move higher before we see another move lower and then a takeoff. All right. What would we want to see with regards to the invalidation of, uh, any bearish scenarios or another leg down being bearish is you would want to see a surge on Monday, all right, that break this level here, which is the 31,000 level on the NASDAQ, all right, and on the ES, the level 2 break that you want to see the futures break, ideally first the 7,600 level, all right, and then followed by the 7650 level. If the 7650 level breaks on the upside, the bearish scenario is effectively dead. All right, so that's what you want to see. But till then, the expectation is some sort of bounce followed by a move lower that we could see in both the NASDAQ as well as the ES and naturally the smaller cap IWM as well. All right. Having said that, the IWM is showing a little bit more strength. There is a potential bottom in place here. Okay, but having said that, there is still some space for another leg down right at this resistance line here. So we could still do this, head up to this line, and then just go back down one more time before we finally make another move back up. All right. So IWM, same thing, more or less following the broad indices. There have not been a tick up in rates so far. Now let's actually look at the asset that would have reacted first to the Strait of Hormuz incident. So it's looking promising, given that Bitcoin initially fell on the news, all right, of the Strait of Hormuz being blocked, but then it has recovered quite nicely, all right. So we are off the lows. We more or less recovered the losses. However, in the broader and bigger picture for Bitcoin, this is still a very negative picture, all right. Just a reminder that Bitcoin is struggling to find buyers in terms of large buyers. Many of the crypto bros who, um, are like hold Bitcoin to the end. Many of them have been liquidated. The only buyers left right now are Bitcoin and ETH are really the crypto treasury companies. And given where Bitcoin prices are and where their security prices are, that infinite money loop, which they relied so heavily upon, is not really in their favor right now. So again, just be a little bit cautious of Bitcoin. It is possible still that we see a bounce from here to the box again before another move lower. All right, but overall, Bitcoin right now in terms of overall pattern, the primary pattern is it has moved here, topped at the 67262 level. All right, and by Monday we should see some sort of resolution or top in Bitcoin somewhere around the 64,600 level, and then a resolution to the downside. All right, so if you're trading Bitcoin, just bear in mind that there is a lot of bearish sentiment on Bitcoin. Just be a little bit cautious. Where would the bearish or the bears be invalidated? 66,000 would be the first level that it needs to cross, followed by 67,270. All right. Without these levels being crossed, essentially, Bitcoin remains in a firm downtrend. All right. Now, with regards to ETH, okay, same picture. As you can see, ETH is starting to curl back down. Again, if you are playing the bounce over the weekend from the news of the Strait of Hormuz, it is not a bad idea to actually start considering getting out of those positions. All right. So again, it could take this path that we said down, up, and then move down again. All right. But the primary path expected is that it has topped here. All right. At the 1838 level or the 1840 level. And then we should have a resolution and a continuation of the downtrend. And only on a break, okay, for ETH, you need a break of 1813 for us to actually start saying, hey, the bears are probably wrong, and we may get an invalidation of the whole bearish pattern, but it's not invalidated until 1850 breaks to the upside. All right, so until 1850 breaks, the primary trend for ETH is down. All right, so just bear that in mind when you're trading. ETH BTC ratio. All right, now ETH BTC ratio is looking quite constructive, as you can see. All right, this is a very nice consolidation pattern. We may see, all right, a outperformance of ETH over Bitcoin in the coming week. All right, you can see very nice consolidation pattern happening here. All right, if you add the Bollinger Bands, this has been a very nice cross to trade. Where is the target then if we were to measure a target for this? There is a potential for this to take off towards this level here, all right, to the upside. So just bear in mind that ETH may outperform Bitcoin in the coming week ahead. So if you've been trading this ratio, good luck with that, all right? But it does look like as long as this wedge holds, we can have a outperformance towards the 0.276 level, followed by the 0.28 level. All right, so relative outperformance of ETH against Bitcoin expected in the coming week. All right, now with regards to gold, our favorite asset. All right, so gold, it's moved a bit lower than expected when it came off from the news, and of course, when the Fed gave its bearish forecast or hawkish forecast, or actually the removal of forward guidance, the reaction of gold has been a little bit more violent than expected. However, we are seeing spikes like this that happen throughout the day. All right, And just bear in mind that gold has a buyer of last resort, which is the PBOC. Lots of central banks still buying gold, and you are seeing those spikes that happen. All right, so still very much expecting as long as the lows hold. All right, as long as the lows hold from the June lows, we can still see one more leg higher, at least for gold. All right, so in the much broader picture, you should see at least one more leg higher in gold, even if we will have another move to the downside. Right now, into next week, looking for a bounce in gold. So the bias will be long gold. Immediate long biases, if gold opens, you just don't want it to break 4124.89. All right, so 4124 as a key level. If it breaks 4124, just be a little bit cautious. Wait for a resolution or a consolidation of the overall pattern. All right. Having said that, if it breaks the June lows here from this side, all right, which we can expand a little bit, find out what it is. Okay, so we have the June lows here. All right, 4023. So as long as 4023 is not broken to the downside, we are still looking for a bounce. However, all right, if that bounce doesn't materialize Monday morning, when the OTC markets first open, you do wait for a sort of like consolidation or a base to form, and a curl to the upside. All right, just be a little bit cautious when trying to catch these kind of reversal patterns. They may take more than one attempt to catch if you are trying to catch gold. But if you've been whipsawed by gold this week, don't worry. It's been a really, really hard week for gold traders this week. All right. Now, with regards to silver, again, silver's picture actually looks better than gold. All right, as long as this low here doesn't break, it's 63.3. All right, or the 63 level. All right, and as long as the June lows hold, all right, we are looking for a 6150 holds. We are looking for a bounce in silver. All right, still looking for a bounce, but again, just like gold, if it starts to just melt down on you, be a little bit careful. Wait for a resolution, and then take your positions from there. In the very, very short term, if you're looking for a scalp on Monday, let's say it opens around current levels of 64.88. All right, you're looking for a move towards the 66.30 level, followed by 66.90 level. All right, and your stop loss in the very, very short term would be 64.10. All right, for a roughly 1:2 risk reward level or 1:3 risk reward trade on Monday open. All right, but just bear in mind, first 2-3 hours of the open, the market's really illiquid, jumps around a lot. Bid asks are really wide, so just be a bit cautious if you are trying to trade that at the open. All right, cool. Gold silver ratio. We were saying last week, we were expecting this ratio to continue to the upside. All right, so that is not done yet. We may see a move lower come Monday, all right, morning, and then eventually expecting that ratio to resolve higher, all right? So it could be silver outperforms Monday morning, all right, followed by, if let's say gold and silver, for whatever reason, the bounce doesn't occur, gold falls faster than silver and we get a relative outperformance. But gold-silver ratio has room to the upside to move. So if you are trading gold-silver ratio, again, do watch for buy signals at the 2.5 standard deviation with your Bollinger Bands in place, and then optimize from there accordingly. All right, so that's the gold-silver ratio. Currency-wise, okay, dollar yen, again, we are firmly above the 160.50 level. All right, so in terms of where we are going, again, 163.60 is still a broader target. All right, this carry trade is still in place despite the Bank of Japan raising rates, partly because of Kevin Walsh being perceived as a little bit more hawkish than expected. However, again, long end rates are not quite confirming that. So do expect some sort of pressure on the dollar yen as it climbs higher, or threats of intervention. Again, the Bank of Japan, very well known to intervene now during key economic data releases. All right. So whenever you see a key economic data release, if the dollar yen starts to fall at the open of that release, meaning within a second of that release, the dollar yen starts to fall, just be careful that the Bank of Japan can come in near time to actually try to intervene and try to push the dollar yen significantly lower. Right. Again, this is above intervention levels already. Okay. Dollar Swiss, probably above the 80-10 level. This has been the great carry trade. I hope some of you caught it. We've been talking about it for some time. All right. Bigger picture, we are still looking at levels to the upside. Again, this is a very, very, very big inverse head and shoulders. If you guys can see this pattern here. All right. Or you could call this a cup and handle. Up to you. All right. The question is what the target would be. We are looking at targets somewhere around this level here. So possibly around the 83.20 to 83.70 level. Let me draw a box for you guys on this one. All right. This will be a target zone for the dollar Swiss. All right. And again, just bear in mind, this is at a multi-month, multi-year low, has just come off all-time low, actually. All right. So the dollar Swiss, still a lot of room to move to the upside. The ECB raised rates. The SMB has not raised rates. The Swiss remains as the cheapest funding currency out there in the market right now. And in terms of inflationary pressures, you know, oil hasn't jumped as much yet. Well, we'll see Monday when the markets open whether the Strait of Hormuz news pushes oil to the upside. That will be key to watch. But if oil doesn't push to the upside, the growth in Europe and inflation data would not support further rate hikes from the ECB. All right. So just bear that in mind if you're looking or if you're very bullish the euro against the dollar, which is, of course, which does affect your dollar Swiss. All right. But the dollar Swiss has been a relative outperformer in terms of a carry trade. If you were harvesting the swap points, good on you. This would have been a very nice carry trade, very steady carry trade, as you can see throughout the entire period of time we've been talking about it. Had a bit of bumps on the way, but if you size nicely, all right, it's been higher lows all the way. All right, higher lows all the way since we talked about it. So I would say on the overall, dollar Swiss remains bullish, but bear in mind that we are also coming up against resistance levels at 81.50. So around 81.50, if you have been long on the carry, just be a little bit cautious about adding or staying a bit too heavy on that long side. All right. Same thing for euro dollar. All right. So euro dollar, the trend right now, as you can see, fairly bearish. All right. From where it's come from. Whenever you see a FX pair doing this, all right, just zooming out. When you see a FX pair doing this kind of like down, sideways, down, like a very step-like function, all right. Although you can argue it's not a straight line or trend down, but usually when it's doing this kind of like step-like function, it is a very, very bearish pattern on the overall. Right? So this has started since the April highs and has continued to go lower. So expecting the downtrend to continue to the downside. I'm not sure how many of you have been trading euro dollar. All right, but euro dollar again, expecting a resolution towards the downside on the euro dollar front. Maybe a slight bounce on Monday, but then a continued resolution to the downside. Okay, and the question then is, where could this go if it resolved to the downside? All right, so I am expecting the euro dollar. I'm not sure where it will top yet. All right, but if this bounce is weak and starts to turn lower, I am expecting the euro dollar to actually test this zone here. All right, the 113.50 to 112.70 region. All right, that's where I'm expecting the euro dollar to go. Okay, cool. Okay, so let's quickly also cover WTI. So WTI, as you can see, nothing bullish in this chart. All right, nothing bullish in this chart at all. Okay, and again, it's broken down from a very, very, very big range There is a possibility, all right, there is a possibility that on Monday, all right, because of the news out of Iran, that they have closed the Strait of Hormuz, that this tests 80 on the upside, and then it resolves to the downside again. All right, so nothing really to get excited about with regards to WTI in terms of a bullish outlook, but this could happen. All right, and again, the levels that we are looking for are levels in the 60s for WTI. All right, but this could happen on Monday, spike to the 80-20 level, $80 level, come back off again to the downside. All right, so this is one of the key commodities to watch because it will affect your risk on, risk off sentiment as you get into the New York Open. Okay, cool. Now, this week, in terms of securities, we're going to just look at some of the broader chip sector stuff. So SMH, all right, semiconductors. Okay. So the broad chip sector, all right, on the overall, still, it's actually recovered this uptrend line. All right. So whenever you've broken below and you've recovered like this, overall, it is generally a very bullish sort of outcome, as you can see. All right. Semis have been hot. Memory has been hot. All right. But again, just a reminder that the winners of today, the winning sectors of today, may not be the winning sectors of the next bull run. All right. However, right now, semis are demonstrating a lot of relative strength. As you can see here, the semis, all right, if you just look in the overall pattern, okay, while the S&P has been coming off, the semis have actually been showing new highs. All right, so the S&P and the Nasdaq did not break new highs, but the semis have. Okay, so whenever you see stuff like this, again, if you are trading equities, what you always want to do when you see a market like this is, okay, semis are strong. All right, they are not falling as much as the broad market. Find all the stocks that are not doing so well and follow more than the broad market, sell them out, and then buy into the stuff that actually has not fallen. All right, because when the market does resolve again to the upside, usually the guys with relative strength will actually start to go. And this is actually a very counterintuitive type of um, rotation when it comes to switching, because most people want to rotate out of strong and buy weakness. All right, that's a general trading pattern and consensus. But when it comes to trading, just bear in mind that relative strength tends to run first. Okay, so things like semis, things like you know, the memory space. So you got DRAM, right? So this is the memory ETF. As you can see here, while the S&P and Nasdaq have struggled to be at new highs, this has continued to move to the upside and print new highs. All right, no pullback whatsoever. Okay, so if you get a resolution to the downside on the S&P 500, watch this to maybe test the 21 EMA. It's going to be uncomfortable. But if, let's say, a sector that has been hit pretty hard because of the news from the private credit sector is IGV. All right. So for those of you who have been wondering why software has been falling, it's because of a recent Bloomberg article. What happened was that Thoma Bravo, one of the software companies that they bought with the private credit fund that they had, couldn't refinance at the bank because the revenues had come off significantly, and this was viewed as that as sort of a canary in the coal mine, that perhaps everything that people thought in the sector that was strong, like proof of record, what have you, may not necessarily hold, and that company's equity was actually wiped out, and then a consortium from Apollo actually took over. And that news actually hit all the software names really, really hard, whether it was Palantir, ServiceNow, Microsoft, and everything. But again, zooming out in the bigger picture, just bear in mind that Microsoft, Palantir, many of these guys are still the AI winners. Having said that, all right, having said that, when you are trading for the moment, you need to let the market resolve, even if the fundamental point of view you have might be right. So if you say software is too cheap here, you may be right. All right. However, in the short term, you do need to make sure that you protect your portfolio so that you live long enough to actually participate in that software rally. And what do you do? So if you're in some names that are down, you would want to look for, again, names in the semi space, SanDisk, uh, Micron, names this semiconductor names. If let's say the S&P 500 resolves to the downside again, and then rotating into stuff with strength. All right. Other than semis and memory, we also have stuff in the, I would say, utilities, the neo cloud sector that have done really, really well. So names like NBIS, all right. Okay, as you can see, relative strength, done very, very well. S&P 500 has pulled back a lot, but this guy stayed up there. Okay, CoreWeave is actually the laggard when it comes to the neo cloud space, so be a bit careful if you're trading CoreWeave. And again, if you are not used to the volatility of this sector, all right, stay with the semis. You can trade Nvidia. You can trade, right now actually AVGO has been a good relative play. All right, Broadcom has had a very nice bounce, as you can see, after earnings fell, but right now displaying lots of relative strength. We did say that we were looking for a target last week of this actually moving off and hitting this target. It has hit that target very nicely, as you can see here. All right, we mapped out the target, and it has almost hit the target with precision, as you can see here. We more or less met that target zone between the 408 level here. You would have actually gotten out. And even then, with the weakness in the S&P 500, you would have actually done quite well, even if you didn't sell out at the profit target. All right. So again, this can take you for a bit of a ride because it would have given you a bit of a heart attack with the initial move down here from the news on Iran. But you can see how fast this moves up again. All right. And again, this was not a broken chart until the 366 or 367 level broke. All right, the bias is still alongside. And right now, it has regained its strength. So do look for this to have a continuation. So again, if you are not comfortable with neo-cloud names that have like, some of them have like 80 to 150 vols on the option side, you can look at bigger names within the SMH sort of like space. You can look at names in the memory space, Micron, NVIDIA, Broadcom. Broadcom has been a great relative value play. If you're playing that on an EL prop account, this has been a great trade for you. All right. So again, look for stuff that moves within a range of comfort. All right. Now, I wanted to also sort of like cover some of the other names that you guys, okay, wait, let me just cover AMD as well, just before we move on to names that you guys might want to cover. All right, AMD has not shown as much relative strength, but still holding up relatively well compared to the broader market. All right, but again, just be a little bit cautious because this is one of the semi names that has not shown relative strength. So if let's say you were long Broadcom and you said I wanted some sort of hedge, you would have actually shorted AMD as a hedge. All right, just maybe part of it to sort of reduce the market factor risk on your trade. All right, so that would be for AMD. Because AMD is, I think, it should be making new highs, or should be, following the SMH towards making new highs, but it's not. So just be a little bit cautious around SMH. The other big space that you guys can look at are the former Bitcoin miners, but bear in mind that they have huge volatility. All right, so stuff like Hive, okay, great name, great chart this week. All right, although this engulfing, although this bearish It's not an engulfing pattern yet, but this bearish candle is a little bit worrying, but overall relative strength in this name for Hive. We also have, we think iron, which also falls within the space. All right, iron is consolidating nicely. All right, but again, all these names relatively more speculative in terms of their overall, trading style and pattern. You have to be very light on your feet when you're trading these. They can change on a dime. They have very high volatility, so expect to get stopped out quite a few times before you get the trade right at times. Right? A name that actually is quite neglected, but has quite a big potential for a nice bounce trade is IBM. All right, so they've done quite a bit in the quantum space and all that. Quantum's a bit out of fashion right now, but this is actually very near a support line. All right, so you have a very nice tightly defined stop at this 245. I would say 243.9 level. All right, if you want to take a higher risk, more speculative bounce trade, where would you be looking to sort of like square your position after the initial surge? You'd be looking to square your position somewhere around this 280 level. All right, unless some news develops that really helps it to start pivoting to the upside. So very old legacy name, okay, but a name that could actually start to outperform or start to actually have a very nice bounce trade setting up for you into the next week. Okay, cover other names like Google as well. Okay, now Google has had a nice bounce. Okay, however, it is more or less following the broad S&P 500. So just expect this name, all right, to be dragged lower if the S&P 500 decides to resolve to the downside. All right. Question is, how low can this go? All right, we can get some indication. Let's assume the high is in place here. All right, we could go as low as the 350 level with the 348 level as support. Okay, so really this box right here. Okay, so we want to be a little bit careful about being long Google. I know it's very tempting. Google, Microsoft have been extremely tempting. If it's a longer term play you have in mind, this is probably going to work out quite well for you. But as for the short term, just bear in mind that this name could resolve to the downside with the S&P 500 because of its weightage there and because of the technical pattern that is in place. Now, a sector that has been doing quite well is the financials. So stuff like Goldman Sachs. Okay, this is a relatively bullish setup. This is a very nice impulsive wave or impulsive move. So into next week, do watch the financials. All right, Goldman has enough in place here to actually have a complete consolidation. So IBM will be a very high risk bounce play, but Goldman Sachs, JP Morgan, these names, all right, these guys are setting up for if let's say the S&P resolves lower and these guys don't actually go lower, these are setting up for very nice continuations to the upside. All right, so watch Goldman, JP Morgan for some names that could resolve to the upside. Between Goldman and JP, you don't, okay, so JP doesn't have as nice a pattern, right? So you don't want to see this kind of big, wide, loose movement. Again, whenever you're looking for equity consolidations, you kind of want to see something like this, tight, all right? And then nice resolutions to the upside. So tight, all right? This is too loose, let it tighten up a bit, all right? So between Goldman and JP, I would choose Goldman as the trade to look at. And again, all these are available on the Veridium platform. You can trade Goldman, you can trade JP Morgan. Let me jump around actually to Intel, which was a stock that had a lot of movement last week. All right, so this is a very nice consolidation pattern here. All right, there was news out of the White House again last week with regards to Intel. So I don't know if the White House is trying to pump up stock so that they can start selling their stake and start monetizing. It's anyone's guess. All right, but this is a relative strength chart, as you can see, higher highs in line with the SMH, and better than the S&P 500, which has not been able to reclaim its highs. All right, so Intel, a name that is you're kind of looking more on the bullish side for Intel. All right. Now, with that, okay, I am going to open up the floor. Any markets that you guys want to cover, since this is Sunday, we can take a bit more time with regards to the markets you want to cover. Just put it in the chat what names you might want to cover. All right. Yep. Okay, just put it in the chat. Any particular market you want to cover. Although I've covered quite a bit of names already within the overall, what's moved this week. But just put it in the chat if there is any names that you actually want me to cover. All right, or any markets you want to actually have a look at. Okay, good. Meta and Amazon. This is a tale of divergence. All right. So this, I know a lot of people have been trying to play on a bounce for this, but this is not what you want to see. So I'll give you the bullish and bearish outlook potential. Okay. Okay, so the bullish potential for Meta is for this to move towards the 611 level, 625 level. I know some of you trade METU, which is the double ETF. Meta is tradable on the Veridium platform under the equities eval. All right. So this is the bullish pattern. But, all right, having said that, after I give you the bullish pattern, there is a good chance that Meta still resolves to the downside, testing the 525, sort of like 546 level. All right, there's a good chance that this still resolves, especially if the S&P resolves to the downside, that this resolves to the downside. All right. All right, Amazon. Okay, Amazon again, broad in terms of a big picture, long term, it is an AI winner. It is the AI infra. It is an AI infra play. As they say, if you turn off Amazon Web Services, there is no AI. All right. Okay, cool. So Amazon, where could it resolve to the upside? If you have some bullishness to the upside, I would say you're looking at a 250 level to 256 level on the upside for Amazon. And then we'll see how it behaves. But if the S&P resolves to the downside, do expect 236 to again be tested, which has been key support. Yeah, this 230, I would say this 236 level at this point in time is a major line in the sand that cannot be broken. So 236 for Amazon, but still a better looking chart overall versus Meta. All right. All right, cool. Okay, when it comes to copper, right? I would say that just be very cautious if you're trading copper with regards to copper futures. Okay, this should be because copper tends to be very, 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 very gappy on the futures. All right, so when you trade copper, right? Okay, if I show you the 5-minute chart, okay, if you look at these lines here, whenever you see a chart with a lot of these lines here, right, be very, very careful when you're trading them because number one, they don't really obey technicals. Number two, the bid ask is going to be insanely wide. All right, so if you're trading copper futures, just be really, really, really careful about trying to scalp and having a tight bid ask. See, even on the hourly chart on the COMEX, right? I mean, whether you trade the LME or you trade the COMEX, you can see how much gap movements there are in copper. This is not an easy chart or easy thing to trade technically. It is much more fundamentally driven in terms of supply demand fundamentals. And the guys who trade this a lot have a serious information edge over any retailer in the market. So just be a little bit cautious if you are trading copper, all right? Wheat, same thing, all right? So if we look at wheat, let's see if we can find the CBOT wheat futures. Okay, again, you zoom in, okay, wheat's a bit more liquid, I guess. But even then, commissions on wheat futures are quite high. Having said that, all right, this does have some really nice movements off the lows. All right, so wheat is looking quite bullish on the overall. I'm a bit hesitant to give you any sort of like projections or levels, all right, to the upside, because I would say that for wheat, this thing can gap against you quite a bit and gap over levels quite easily. But if you put a gun to my head, where would I actually go? And if you're trading wheat futures, which are also available on our futures platform, all right, the question then is which level could this hit? We're kind of looking at levels to the upside here, somewhere between the 63.10 and 6442 level. All right. So that's for wheat. All right. Sterling pound. Sorry, what is dragon, by the way? I don't really know what's dragon. You talking about dollar CNH or what? Because dragon could be CNH or sterling yen. All right. Cool. Okay, gotta admit, I've never heard people call sterling yen dragon. It's nice to learn something new. All right, cool. Sterling pound, pretty much the same. Yep, this looks like a very bearish chart. Bigger picture. Yeah, there's not a lot to be constructive with regards to this chart. So yeah, the short side would be a nice bias. Look at the question would be where. If we took this right now, okay, so let's say this opens up on Monday. I'd be looking for shorts to test 131.50 to this 130.50 level for the sterling pound. All right. So let's say it opens somewhere here. It could go here. I'm looking for a test of this level here. All right. Between 130.50 to 131.50. Okay. So sterling pound, just like euro dollar, looking for continued downside. Okay, sterling yen, right? I just want to highlight that sterling yen is a calculated cross. It is not an actual traded cross. So what do I mean by that? So when it comes to sterling yen, it is a cross pair that the market makers will quote you between the sterling pound times the dollar yen. All right. So the bid-ask spread on sterling yen can vary quite a bit. Also, just as Guy, if you've actually made money on sterling yen as a trader, you will be one of a very rare breed of traders. In my entire